Back in 1993, the Republican propagandist William Kristol urged his party to block any health care proposal in order to present the Democrats from being seen as the, quote, generous protector of the middle class. But today you've got some Democrats who are going along with the industry. I mean, Max Baucus, the senator from Montana, for example, the most important figure right now in this health care legislation that's being written in the Senate, he's resisted including a public insurance option in the reform bill, right?
That's right.
Why is the industry so powerful on both sides of the aisle?
Well, money and relationships, ideology. The relationships, an insurance company can hire and does hire many different lobbying firms, and they hire firms that are predominantly Republican and predominantly Democrat. And they do this because they know they need to reach influential members of Congress like Max Baucus. So there are people who used to work for Max Baucus who are in lobbying firms or on the staff of companies like CIGNA or the association itself.
Yeah, I just read the other day in the Washington Post that Max Baucus's staff met with a group of lobbyists. Two of them had been Baucus's former chiefs of staff.
Right.
I mean, they left the government, they go to work for the industry now. They're back with an insider status. They get an access, right?
They do. And these lobbyists' ability to raise money for these folks also is very important as well. Lobbyists, many of the big lobbyists, contribute a lot of money themselves. One of the lobbyists for one of the big health insurance companies is Heather Podesta, the Podesta Group. And she's married to Tony Podesta, who's the brother of John Podesta.
Who used to be the White House Chief of Staff.
Right, and they're Democrats. And my executives wanted to meet with, when I say the people I used to work for.
At CIGNA.
Wanted to meet with Hillary Clinton when she was still in the Senate and still a candidate for president. Well, that's hard to do. It's hard to pull off. But she did. That just shows you that you can, through the relationships that are formed and that the insurance industry pays for by hiring these lobbyists, you can get your foot in the door. You can get your messages across to these people in ways that the average American couldn't possibly.
So it's money that can buy access to have their arguments heard, right?
That's right.
When ordinary citizens cannot be heard.
Absolutely right. It's the way the American system has evolved, the political system. But it does offend me that the vested special interests who are so profitable and so powerful are able to influence public policy in the way that they have and the way that they've done over the years. And the insurance industry has been one of the most successful in beating back any kinds of legislation that would hinder or affect the profitability of the companies.
Why is public insurance, a public option, so fiercely opposed by the industry?
The industry doesn't want to have any competitor. It, in fact, over the course of the last few years, has been shrinking the number of competitors through a lot of acquisitions and mergers. So, first of all, they don't want any more competition. Period. They certainly don't want it from a government plan that might be operating more efficiently than they operate. The Medicare program that we have here is a government-run program that has administrative expenses that are like 3% or so.
Compared to the industry's?
They spend about 20 cents of every premium dollar on overhead, which is administrative expense or profit. So they don't want to compete against a more efficient competitor.
You told Congress that the industry has hijacked our healthcare system and turned it into a giant ATM for Wall Street. You said, I saw how they confuse their customers and dump the sick, all so they can satisfy their Wall Street investors. How do they satisfy their Wall Street investors?
Well, there's a measure of profitability that investors look to, and it's called the medical loss ratio, and it's unique to the health insurance industry. And by medical loss ratio, I mean that it's a measure that tells investors or anyone else how much of a premium dollar is used by the insurance company to actually pay medical claims. And that has been shrinking over the years since the industry has been dominated by, or become dominated by for-profit insurance companies. Back in the early 90s, or back during the time that the Clinton plan was being debated, 95 cents out of every dollar was on average was used by the insurance companies to pay claims. Last year it was down to just slightly above 80%. So investors want that to keep shrinking, and if they see that an insurance company has not done what they think meets their expectations with a medical loss ratio, they'll punish them. Investors will start leaving in droves. I've seen a company's stock price fall 20% in a single day when it did not meet Wall Street's expectations with its medical loss ratio. For example, if one company's medical loss ratio was 77.9%, for example, in one quarter, and the next quarter it was 78.2%. It seems like a small movement, but investors will think that's ridiculous and it's horrible.
That they're spending more money for medical claims
and
less money on profit?
Exactly, and they think that this company has not done a good job of managing medical expenses. It has not denied enough claims. It has not kicked enough people off the rolls. And that is what happens, what these companies do to make sure that they satisfy Wall Street's expectations with the medical loss ratio.
And they do what to make sure that they keep in diminishing the medical loss ratio?
Rescission is one thing. Denying claims is another. Being, really careful as they review claims, particularly for things like liver transplants, to make sure from their point of view that it really is medically necessary and not experimental. That's one thing, and that was at issue in the Natalie and Sarkeesian case. But another way is to purge employer accounts that if a small business has an employee, for example, who suddenly has to have a lot of treatment or is in an accident, and medical bills are piling up, and this employee is filing claims with the insurance company, that'll be noticed by the insurance company. And when that business is up for renewal, and it typically is up once a year up for renewal, the underwriters will look at that and they'll say, we need to jack up the rates here, because the experience was, when I say experience, the claim experience, the number of claims filed was more than we anticipated. So we need to jack up the price, jack up the premiums. Often they'll do this knowing that the employer will have no alternative but to leave, and that happens all the time.
So the more of my premium that goes to my health claims, pays for my medical coverage, the less money the company makes.
That's right, exactly right.
So they want to reverse that. They don't want my premium to go for my health care, right?
Exactly right.
Where does it go?
It goes, a big chunk of it goes into shareholders' pockets. It's returned to them as part of the investment to them. It goes into the exorbitant salaries that a lot of the executives make. It goes into paying sales, marketing, and underwriting expenses. So a lot of it goes to pay those kinds of administrative functions, overhead.
When a member of Congress asked the three executives who appeared before the committee if they would end the practice of canceling policies for sick enrollees, they refused. Why did they refuse?
Well, they were talking to Wall Street at that moment. They were saying that because I guess they might have to spend some additional dollars to be more vigilant to make sure that they were not rescinding a policy inappropriately. It makes no sense. The only reason they would have said that is to cover themselves and to signal to Wall Street that, we're going to continue business as usual here.
I've been around a long time, and I have to say, I just don't get this. I just don't understand how corporations can oppose a plan that gives the unhealthy people a chance to be covered, and they don't want to do it themselves.
Well, keep in mind, what they want to do is enhance their profits, enhance shareholder value. That's number one. And the way the business that they're in is healthcare, certainly, but their primary motivation is to reward their shareholders. Most of the shareholders are large institutional investors and hedge funds. Hedge fund managers are the ones who look at this stock, and investors for large organizations. It's not mom and pop investors.